Good morning. It's Friday. Markets are going up again. I do it every day. So I guess it's going to continue into the new year. I don't imagine what's going to stop it at this point. That's pretty much all the news is out. News worth being news. The impeachment thing is a dud. Nothing seems to be there. No worries. So markets should go up, and maybe, just maybe we get some kind of a climactic push to the upside that will start a correction of some degree. But, the markets had this little fake move, so to speak, I guess. And, we didn't know it was fake in the moment because it violated support. And, then it came back right back up again in the bullish price action that we spoke about the last couple of days. And things have continued, right? So this little sideways where the things just, it was like that day we had that little narrow range day and nothing happened. It was just the market resting for a very short period of time. And with a little narrow range day like that, it seemed, well, higher odds that prices could pull back, as we had this little consolidation, but no breakdown. And higher yet again. And so where's it going to stop? Well, in reality, nobody knows. We all know it won't go up forever. It never does, from a shorter time frame anyway. If we go back to yearly time frames and quarterlies and such, you see that, things have gone up for a very, very long time. But one of the things that we do know is that when we see a wide range bar after prices are moving up for a period of time, that's historically a sign of an end of a move, and we don't have that yet. Whereas, bars like this, we call these igniting bars because they come after a corrective type of price action. So let's assume for a moment, just for discussion, that this continues to move up, and after Christmas or maybe into New Year's, whatever, all of a sudden we have this amazing giant rally day. Well, that would be a really good sign that it's over. Leaving Sunday, rolling to travel Sunday afternoon. So I'll be traveling on Monday. It's a long travel. I think it's like 8-9 hours on the plane, and then you stop 3 hours to get from Germany to Sofia, then 4 or 5 hour drive to Burgas. So it's a big trip. So that's what we look for over the coming days and I guess the next couple of weeks. And so we can't assume that that's what's going to happen, right? So that's one scenario. And the other scenario is, well, what would make us think differently? Well, there'd have to be what I refer to as an event. Dan calls it something. But in other words, it's something that's make you say, oh my God, what happened? Which, could be on Monday, a gap down under this green line. So last week I spoke about in the letter and here was that, well, was it last Thursday's the rally day? As long as if prices went under that, that's going to be a problem. And that didn't happen. Prices went up. They rested sideways. They went up again. And again, this is just the start of the day, but you can see the weekly time frame here. Even this bottoming tail bar, correction type of bar, didn't even result in really any kind of a corrective mode within this time frame. Just another up, higher high, higher low bar. And today, Friday, another higher high, higher low bar. No retracement whatsoever into this prior candle. So clearly buyers are in total control here, right? And sellers, who's ever taking profits, good for them. Who's ever shorting the market, not a good idea. And so that's where we're at, and we'll just follow it bar by bar. So today, right, today, our first reference point of support is yesterday's low. And of course, that would be a bearish event if prices were to take that out and close underneath it, because it came after a period of rest, this little sideways action here. So a breakdown below that would have us looking at a breakout failure, right? A 180 type reversal. So I'm not predicting that. I don't know what's going to happen. It's just, I always have a bullish scenario and a bearish scenario. And of course, it could be just neutral, but the weight of the evidence right now says higher. And so this is our line in the sand there that would start us thinking that maybe some type of pullback is going to occur. You can apply that kind of analysis to anything. Right? So Qs, NASDAQ here, similar resting period, that little narrow range day, move up yesterday, and that came there, and it started and up it went. And so now same thought, it stalled at 8,600. Now it's coming up, getting closer to 8,700, and move the green line up to yesterday's low. Ideally, since it's a little bit of a range expansion bar after this little consolidation, ideally it doesn't get more than 50% on any corrective action there. And you can see on the hourly chart, this little buy setup, was it pushed up and created like a little support area there. As it pulled back, and what is that, maybe 4 bars or so of a rounding kind of a type of a bottom there, and then the next push higher, and then you can see 8,700 quite clearly right there. And traders typically have a little bit of hesitancy around those round numbers, so we'll see what happens there. So something to keep in mind, that maybe this gap higher this morning might reverse immediately after the first 5 minutes or so to pull back, where we can assume that buyers will step up again. And you think, well, where will they step up? Well, we can just go with that 8680 area, what was resistance, to become support, and really simple, right? And on the other side of that is, well, what if it comes down to major support? Well, there'll be buyers there too. But the retracement concepts that Dan and I covered in the MT Live 2 weeks ago, really simple analysis would say, well, if it went from here to here, and that's strength, and it pulled back all the way down here, something's wrong. Because that's not what's supposed to happen. The buyers are supposed to be here and push it higher. Now, if it comes down here, it's not the end of the world, because it's major support, even though the retracement's deep. We start with the assumption buyers are going to be there. Let's see what happens. If it slams through here like it's not even there, that's a problem, right? Because there's a void below. And then we'd look to intraday anyway, be short sellers on retracements. It still wouldn't damage the trend on the daily chart or the weekly chart. That's how we kind of look at multiple time frames, and we can shift our bias if we are intraday traders by using intraday charts and still keeping the big picture and perspective of what's going on. And YM, which has been lagging, kind of catching up a little bit, and new all-time highs, looking great. And the way things are looking here, and we haven't even looked at internals that would give us any kind of a heads up, sentiment has not really given us a problem yet, right? Breadth is supposed to get up above 100 here, and it could easily go up to plus 200 if this was to accelerate, and then this line would come up into this bearish area. And then we might see the wide range bar and so on and so forth. And we get some kind of corrective action within the uptrend. We'll do that, Paul. Right? So internals here are not giving us any signal, even though this is starting to get to a bearish level. It certainly could go higher, right? Like it did up here. Well, that was the beginning of a rally. This has been rallying already, so a little bit different. So there's a little educational piece of information here, is that when you have a deeply, not so much oversold, but bullish sign where this has gotten to such an extreme bearish level, and it goes all the way up to an extremely bullish level in a matter of days, that is super bullish, right? So even though it reaches a bearish area, right, that is not bearish when it does it that fast. That's just this giant tidal wave, so to speak, of stocks all moving together, right? So just money just pouring into the markets, buying everything that it can get its hands on. So, and SPX, let's just look at the Russell here first, which just continues to march higher into that void with just this soldier-like march, so to speak. Look at the tails that were over here, so a little uncertainty, and now there's no tails. And it's, a soldier march is that, you've seen soldiers march. They all, their feet hit the ground at exactly the same time, and the other foot goes up, and it's just so organized and, a thing to watch. So kind of that's the way things are beginning to move here in a very controlled manner, higher highs, higher lows, little retracements into the prior bar, and which we've looked every day, the fact that the Russell is pushed into this void, and we talked about that weeks ago. So if you took note of that, your bias would be that, hey, this was going to play catch up. That's what we talked about, and that's exactly what it's doing. And oil, a bit of a stall there, looks like, well, it should be able to get up here. But right now, for whatever reason, there's some profit taking coming in. Bonds are down, they're not bouncing from here, but it's not like they're just tanking. So, you got to watch out. It's in that area right here. I know it's broken it, but, as it came to resistance and now it went down, you got to be a little careful when it pops under the prior low. It's what we call a greater than 100% retracement like that. A lot of times it pops back up. So, what we want to see in a scenario like this is some sideways price action, similar to what we talked about with bullish scenarios where they go to the top of the range, some sideways price action and breakout. So bearishly, some sideways price action and then break down. But in addition, notice with this setup, there are two support reference points, which just leads me to believe that this is not a good setup to short. When you've got two reference points of support right next to each other, tends to create choppy price action. Something to think about. And gold is just kind of waiting there, honestly, bullishly, because there's been this bit of an inverse relationship with the broader market. So while the markets are marching higher, gold is just hanging out here, just kind of waiting as if it's like, okay, you're going higher. I know, kind of like the way I'm thinking about it in my mind is like, I know your march higher is short-lived. You're going to pull back to earth relatively soon, and gold buyers are not running for the hills as they have in the past. And that's bullish price action so far. Right? That is just hanging out here as the markets go up. And, we've talked about the pullback and the bullish higher time frames. And this is beginning to, or trying to get deep into the wide range bar. It's beginning to succeed with that. And if it gets above this line, gold is going to push up. And then the ability to negate that wide range bar is going to be in alignment with the bullish price action, right? This and this retracement and such. So Go with there. What time is it? I'm doing okay. Silver's moving up a little bit into this resistance area. And lastly, SPX levels, which below here should be safe, right? No premium there. 85. Yeah. So you got to, I guess, take on a little bit more risk to assume that the market's going to continue to go higher. Maybe that's okay that it was able to close through 3,200. You know, buyers are stepping up on dips, and as I said, I don't think what's going to stop it at this point. Just let me look at ES here. Oh, I don't think you could do something with this on the put side without seeing some type of corrective action this morning. And the same thing on the call side. You need to see something fail up here, which it's not happening, right? Even on this dip, buyer stepped up and just rocketed higher. So you'd have to be pretty aggressive, I think, with the market gapping higher to sell the put side down below 3,200. So let's just see if they do sell it at the open and knock it back down and how it reacts. So there you go. All yours, Dan. Oh, somebody has. Oh, Dan. Someone's asking about pins and loco. Is it better to close a credit spread or allow them to expire if they remain out of the money at expiration? You can let them expire. Depends on how far away it is, of course, but maybe Dan can expand on that a little more if he doesn't have a lot to cover. I was asked about on YouTube, Dan.
Yeah, we talk about that, and the OCC rules say that if it expires 1 penny in the money, there'll be automatic exercise. So if it closes flat or out of the money based on the 4 p.m. closing price. However, stocks have gap risk, and ETFs still trade for 15 minutes after, until 4:15. So the only problem you have is if you have an adverse news event that makes your stock move violently against you, and then the option holder still has the legal right to call his broker and manually put in an exercise notice. It's rare, as Greg said, it depends how far away it is. But the only way with 100% certainty that you won't get assigned over the weekend is if you close that out. So sometimes I give that disclaimer and I say, close it out for a penny, just, so you can sleep at night. Because it's happened to me. If you've been trading many years, it's happened. I remember it was Dell Computer. It was like $2 out of the money. And then I on Sunday morning, which is when I get my exercise notices by email, I'm long 2,000 shares of Dell. I'm like, what the hell? And the thing gapped down, and I had to, problem on my hands Monday morning. All our opens are fine. Our TTD put spread is up $2, but yeah, everything's fine. So let's go right to gappers. We did a nice. This came from McGraw. McGraw, I got, I think, 2 trades from you. And old Debbie gave us Bravo X-ray. Gappers now. Well, gappers and other watches. PayPal's not a gapper per se, but I like the pattern there. Let me put that in a window. It's broke out, buy setup, big downside shakeout on the daily and weekly. You can see the big tail, and it has a price void on the weekly. So that would be both a directional and a put spread candidate. But with VIX so low, it's been more challenging finding good premium, but we still gave 4. Tanya, I don't know if you're listening. Let's see, on Wednesday, Tanya said, hey, where's our credit spread trades? And I said, you'll get them when we find them. And yesterday, we gave 4 of them. ABEO, that's a little bio, getting shellacked. Nike here. I said yesterday into the close, when you have big runs into earnings, I have a bearish bias, either for a gap down or a gap and crap. So if this were to gap up $5 on a pattern like this into earnings, then 10-15 minute low, I'd be shorting it. But now it's iffy. It had a bearish gap down, and you can see it's rallying to fill the gap pre-market. So I don't know what to do with that now. MTIO, another bio getting shellacked. MTS Green, that's you, Tanya? Who's MTS Green? Look at this little thing. Remember the IPO? Smile Direct. All right, cool. I don't know what happened to your name. All right, so this was an IPO, obviously. Nasty. Look, here's what Greg talks about all the time on bottoming patterns. This had a nice move, right? Then it had a breakout failure, little head and shoulders. Boom, back down, new low. Kind of rounding bottom. This is what we call a bullish new low divergence. It made a new low, but the distance from prior lows was significantly less. And look at the volume yesterday. And Wednesday's MT Live was what? It was dumpster diving on beat up stocks. This is a candidate right now. This could be the low. I don't know. I'm just objectively telling you the signs that I'm looking at. I love the volume. I love the new low. So let's keep an eye on that. Alex, you love these bottoming patterns. Look at a BlackBerry BB. Broke out, made a new high. Bullish consolidation, bullish engulfing yesterday, and a price void. That's a watch. Tesla, look at this, gapping up $7. That was a bullish move. I wish it was gapping up more. I wish it was gapping up $15, because then we'd be shorting call spreads that expire today, and we still might. That's on my list. 30-minute low. That's a definite candidate. Yeah, Microsoft. Yeah, things are just bullish here. Look at Apple. Facebook had an incredible 180, not 180 reversal, greater than 100% retracement. Look at that, negated those 2 nasty bars. And that's a bullish 15-minute chart. I would never swing this pattern, but this is a day trade candidate. That's a powerful yesterday. Look at that, power, buy setup. That's a bullish 15-minute chart. T-Con gapping up to $3. I don't like the way you trade. SAVE, I triggered a half lot yesterday on the airline. This is what we call a bull 1, 2, 3 with a new low, with a minor little bear sandwich. And so you can add the back half today. KKR, I mentioned yesterday, you can buy you buy today, yesterday's high. Golf Hotel 8240. I don't know what to do with that. Camp 1040. Wow, bearish gap way the heck down here, but no pattern. KNX, I think got a downgrade, something like that. Gap in here to the 200 and support. This that might be a put spread candidate if buyers step up. 30-minute high. Air 49. It's a big gap, but too extended. Oh, this WGO, I sent out a telegram alert. Wow, look at that. What is going on? Pre-market. Look, I'm just looking at my 15-minute charts. Look at Apple. Look at Google. What the hell is this? I've never seen anything like that. I thought, does this have anything to do, Alex, with the quarterly? I thought all this nonsense happened at the close. These are crazy moves. Look at this. SMH is here busting out the new highs. EXAS, Flyman. It's, it's a continuation pattern, target these prior highs in the 200. Yeah, I would only day trade it. And Alex is saying, where's your stop? That's when I just use the 15-minute chart. So my stop, Flyman, would be under this tail, 94.95. Yeah, imbalances, but I thought the imbalances went off at the close. That's my point. We're long AMD. I see that perking his head. What do we, Hershey got a downgrade, no pattern. X had earnings, and that's breaking down. That's ugly. I got no interest. You could do a call spread, but I doubt you'll get anything. Oh, that scared me. SCHL is a bullish steel stock. Wow, let's get my way the heck up there. That's wow. It blows my mind how companies have been in business for decades. And then, oh, Greg, you're beyond if you're still in that. It's not pretty. How you can be in business decades, you report earnings every quarter, and now you gap up this big. All right, look, WGO, shoot, now it's too big. I sent an alert this morning. I sent it by text saying it was gapping up to 50. Look, gapping to 50 is a